Welcome back. In today's video, we're going to be exploring the internet computer bringing DeFi into Bitcoin. And we've been discussing for a few months now that the internet computer was planning on rolling out Bitcoin DeFi and being the first interconnected ecosystem that can not only interact with Bitcoin, but can read and write to the Bitcoin blockchain directly. And so they are now rolling out the technology and tools to be able to help developers in this ecosystem and also users in using Bitcoin DeFi. We're also going to be discussing some recent issues that occurred within the DeFi for Bitcoin ecosystem and how this can potentially impact internet computers DeFi in the future. This is the Cryptoviser podcast. We also talk about crypto, blockchain, and investing every single day on this channel to bring you the latest happening in the financial world. So make sure you guys are subscribed to the channel. Give the video an absolutely free thumbs up. Sometimes we do deep dives into individual cryptos like we're doing today on Internet Computer. And sometimes we talk about the macro in general crypto and financial space. So join the channel by clicking the subscribe button, give the video a thumbs up, and let's get right into internet computers, Bitcoin DeFi. Now, one of the things that we've been talking about extensively throughout the years is the interoperability of different chains to be able to interact, read, write, and move value from one chain to another, because the true sense of the world decentralized finance is to have no intermediaries, no centralized parties, and the ability to move funds as are needed. And so being able to do that in and around different ecosystems has been a challenge for pretty much all of crypto. This is why we have Chainlink. This is why we have bridges within Ethereum's ecosystem. And those are utilized smart contracts. But we've also seen a lot of issues with those smart contracts and exploits and issues on those smart contracts. And those bridges end up getting hacked or have other issues. And we're going to be discussing a little bit more of that in today's video a little bit later on. But first, let's understand what Internet Computer is building here, because this is something that has been getting high level driven by the team at Dfinity, which are the developers behind the internet computer ecosystem. And one of the things that we've covered within the internet computer ecosystem's DeFi was two-click DeFi and how easy it is to interact with DeFi on Bitcoin. And this is something that essentially Bitcoiners have been asking for and other ecosystems have been asking for quite a while. And while there is some kind of bridging to Bitcoin through wrapped coins and some of those kind of techniques and features, there's no true actual decentralized financial applications or smart contracts on the Bitcoin network until now through the internet computers cross-chain interoperability features. So effectively, this is the new Bitcoin DeFi website, bitcoindefi.dev. And it says, bring full programmability to ordinals, tokens, and Bitcoin DeFi with full stack Bitcoin solutions used by the biggest names in Bitcoin DeFi. Now, one of the things that we talked about with DeFi on Internet Computer previously is that originally it seemed like it was just about ordinals and runes, which are effectively NFTs that were built for the Bitcoin ecosystem. And I was like, I really hope they're not just building stuff for NFTs, because I think that that's just, personally, I think it's a kind of like a coin market. It's not really bringing value or anything that real institutions or financial companies are going to use, right? But this is kind of utilizing NFTs for cross-chain interoperability, or DeFi, is good for testing, because you have a real market and kind of real movement of funds and money and the actual items or property from one chain to another. But anyway, they talk about some of the teams that are trusted at Liquidium, Odin Fund, and Omnity. And we're going to talk about Odin Fund in just a little bit. But these are some Bitcoin DeFi apps. Omnity Re is a Turing complete execution layer for Bitcoin, decentralized PSBT signing, and hold on, there's one more there. And advanced programmability while maintaining self-custody, so you actually hold your own crypto. Odin Fund is the biggest BTC Runes platform, which is an NFT ecosystem, 150,000 plus users on Runes, I'm pretty sure, not Odin Fund. And the fastest way to trade Bitcoin tokens. Now, From my understanding, the coins are not self-custodial, meaning they are custodied in the Odin Fund platform. And this is where there was an issue just recently. And we're going to cover that a little bit later in today's video. So stick around for that. And by the way, don't forget to give this video a free thumbs up down below. And then you can see the third Bitcoin DeFi app they have highlighted here is Liquidium. Borrow and lend Bitcoin against ordinals, runes, and BRC20 tokens, instant loans, and Bitcoin layer 1 power, no bridges. We've covered Liquidium in previous videos as well here on the channel. ICP makes this all possible. These are all powered by the Internet Computer, a blockchain that allows for interacting with Bitcoin without bridges, wrappers, or compromises. You can hold runes, ordinals, or BRC20 tokens natively. You can react to Bitcoin state changes, and then you can also create and sign transactions. What you can build currently is ordinals. You can mint, inscribe, and auction Bitcoin native NFTs. I would not suggest doing that. Moving on, runes launch and manage real Bitcoin tokens. DeFi, you can lend, stake PSBT-based contracts. I don't even know what that means. Games, there's native Bitcoin rewards and on-chain fairness. And then ecosystem, tap into the largest Bitcoin ecosystem. So yeah, create and sign transactions. This is probably the most revolutionary capability. And this brings us to what chain fusion technology is. Now, if you look at the Internet Computer dashboard, there is something called chain fusion. This is Internet Computer's interoperability feature. This allows Internet Computer to interact with other blockchains. And they have quite a few cryptos that are what's called chain fused, right? They have the ability to interact with the Internet Computer and vice versa. And so when you click on into the individual asset that you're looking for more information for their chain fusion ecosystem, what you can see is they give you a little bit more information. So effectively, Internet Computer protocol level integration with the Bitcoin network. This is what is offered. A canister smart contract, the Bitcoin canister, operates effectively as an on-chain Bitcoin light node, receiving, holding, and indexing a complete set of UTXOs in an efficiently queryable form. The Bitcoin canister offers other smart contracts on Internet Computer the ability to submit signed transactions to the Bitcoin network. Submitted Bitcoin transactions are signed using chain key ECDSA signatures, an enhanced version of threshold ECDSA available only on the Internet Computer. Chain key ECDSA combined with Bitcoin canister offers canister smart contracts running on Internet Computer the ability to custody and transact native Bitcoin without the need for any additional third-party off-chain custodial or bridging solution. And this is where some of the issue arise. And we can start to talk about that because it is important that we address these kind of things and talk about it. That way we understand how these ecosystems are operating, what are some of the hiccups that come along, because for us to think that these networks are just going to operate flawlessly forever and never have any issues is ridiculous. I mean, even Vitalik Buterin says, like, launch things, let them break, and then we can fix them, you know? And so learning from some of these issues that happen on these networks is super important. That way they can be corrected. And so what you can see here is this shows you how much Bitcoin is currently on the Internet Computer. Now, what you can clearly see here over the last month was a clear drop, and it doesn't look that big on the chart, but this went from about 485 or 486 Bitcoin down to 432 Bitcoin, which is a reduction of about 55 Bitcoin. And that may not seem like that much, but this is almost 10% or more than 10% of the entire supply of Bitcoin on the network. And so why would we see a reduction of over 10% of the Bitcoin? Well, turned out there was a theft, there was a hack, and this was an exploit in the smart contract. And so we shouldn't, I don't want to feel like we should be surprised. I'm not saying anything bad about Internet Computer, but if you look at Ethereum bridging happens through the use of smart contracts. And the smart contract is only as good as the code for the smart contract. And so when there's the ability to exploit some feature that's holding money in a smart contract on the network, there is the potential that there's going to be a theft or a hack or somebody stealing money. And this happens, I don't want to say happens like it's currently going on, but it has historically happened a lot within Ethereum's ecosystem. It's happened on Solana's ecosystem, pretty much all the interconnected ecosystems. We've seen some type of smart canister exploit where a theft then occurred. And so there is risk. I don't want you guys to think like there's no risk in this, because they make it sound like it's totally secure, there's no risk. But again, the code is only as good as the code. And this is where AI comes in. And the ability for internet computers own AI programs like Caffeine AI, which Dfinity is really pushing the features and the capabilities and the technology and the marketing out on Caffeine AI, which is able to code dApps on the internet computer, for the internet computer, then deploy them and host them on the internet computer. And so my question is, why is something not being built? Maybe it is, I don't know, but clearly it's not released yet. But why is something not being built utilizing these AI features to then go maybe check codes, right? Utilize Caffeine AI to check actual programs that are being used on the internet computer. Because if I was let's say the owner of that protocol that had the hack, or even a developer, I would probably want to run that code through the AI and say, hey, is there any way that this code can be exploited? How any of the coins can be stolen? And if your AI is that effective and that good, which I don't know whether it is or isn't, I have not used Caffeine AI or any of these other AI features for coding specifically. Like, why could it not go to Odin Fund's platform, look at the codes, and say, hey, there's this potential exploit that could mean that 50 Bitcoin are going to be stolen from the network? Maybe they can do that. Maybe they can't. I don't know. But it's something that we have to think about, because Bitcoin DeFi is huge. This is a really, really, really important thing for crypto and for Bitcoin and for internet computer. But it has to be right. And we cannot see the ecosystem celebrating a network that is getting hacked. Now, granted, networks are going to get hacked, so I'm not necessarily blaming Odin Fund. I don't know anything about the platform really. I just know that they got hacked, right? That there was 50 Bitcoin stolen. And so that's a problem. And from my understanding, it may not have been the first exploit of the system. And that's also a problem, because that means that their code is not secure. And you need the credibility of the code being secure for people to use it. And so I think a great thing for Bitcoin DeFi would be some type of integration utilizing Caffeine, even maybe a free version where you can go and any dApp, any Bitcoin DeFi app that internet computer is highlighting or saying trusted by teams that these codes are made public and are audited, and maybe even have a connectivity features directly to Caffeine, to click a button and it goes into Caffeine AI and checks the code in the moment and says, yes, there's no potential exploits. Maybe they're not willing to do that, because if the AI says, no, there's no exploits, and then there is an exploit and it gets hacked, that could be a lot of problems. But there has to be a way to make sure that it's secure and safe. Because even with Ethereum, like a lot of people don't want to utilize bridges because they don't want to wrap their coins, they don't want to use bridges, they don't want to do any of that, because they don't want the potential of their money to be gone. And we have to keep that in mind for Bitcoin DeFi on internet computer as well. But that doesn't take away the fact that this is being pushed out. And by the way, the only blockchain network that can deploy DeFi on Bitcoin. So now the only network that has an AI that can code, deploy, and then host all within the internet computer, and now the only network that can also connect to Bitcoin and provide the Bitcoin network with DeFi services. Anyway, the founder of Onyx AI said, most of us are just pure consumers of AI. We want to change that and put you in the driver's seat. And again, this is very similar to the pathway for DeFi and AI, right? Make it as easy as possible to do things, utilizing the internet computer, utilizing this technology. Onic AI, Fun AI uses Internet Computer Stack to let you own AI agents that work for you. You can launch it in one click. Agents run on chain as miners and earn rewards for useful work. And so I'm going to stick to this launch in one click because, again, Internet Computer, Dfinity, they're making things as easy as possible. One click launch of an AI agent. And we've also talked with DeFi, 2-click DeFi. You can literally set up a Bitcoin smart contract on the Internet Computer, 2 clicks. We've covered that on this channel. And so why DeFi on Bitcoin? Why develop it? Well, Bitcoin's unmatched security, $1 trillion in dormant capital. And this is the next step for Bitcoin DeFi, according to Dfinity. Now, one of the DeFi protocol co-founders, Liquidium Phi, said native assets means no extra fees, no delays, and improved capital efficiency. So let's listen to what he says a little bit in this video. And by the way, congratulations and excellent job to Dfinity because now they're posting these interviews without background music. Excellent choice because before we couldn't even play half of these interviews because they would all get copyrighted by the music. So excellent upgrade there. But yeah, let's listen a little bit to the Liquidium Phi Chief Marketing Officer and co-founder Jay about Liquidium, which is essentially like a liquidity provider within the Bitcoin DeFi ecosystem on Internet Computer. We're going to play this at 1.25 speed. Make sure you guys are subscribed to the channel. Also give the video a free thumbs up. You can also become a channel member by clicking the join button or subscribe plus button down below. Let's listen in.
I'm working for Liquidium. I co-founded Liquidium 2.5 years ago, and since then we are building in the Bitcoin ecosystem, and we are the biggest and leading lending protocol for all assets like ordinals, BRC20s, and runes, and that's what we are doing as of right now.
So it says, what are your current and planned product offerings?
Our current product offering is a P2P product where people can collateralize runes, BRC20s, and ordinals. On the other side, there are people which can lend out Bitcoin and get a yield on their Bitcoin, writing loans to those people, collateralizing those assets I just mentioned. This is our current and running product. We also revealed a new product in Vegas last week, Liquidium cross-chain loans. There we are going to go cross-chain. We are going to connect different ecosystems where people can borrow and lend native assets across chains within a simple user interface.
Now, just to tap in here, when they're talking about like utilizing these NFTs as collateral, like you have to look at an NFT like a coin, right? Because they're utilizing NFTs to create a valuation, right? Oh, it's art, people are going to buy that, but it's really the property transfer, right? And then being able to utilize that to then go and collateralize a loan, because you guys have to understand, like, it sounds like a lot of these DeFi protocols are just building lending and borrowing, which in a way they are. But a lot of the lending and borrowing is similar to what the banks do. The banks will borrow and lend just based on like, well, we don't want to sell our house to pay this bill, right? So what we're going to do is we're going to borrow some money until we get paid by another cash flow later in the month or later in the week. And so they do these quick loans. I mean, even sometimes like, if you're trading and you need extra cash from margin, but a trade hasn't settled completely yet, so you may not have the cash there, you may have to borrow money to cover that, et cetera, et cetera. And when you're talking about like businesses typically borrow to then go pay employees until they're paid for the products that they're creating. And so you need that liquidity to have the ability to have DeFi. You can't have DeFi without any borrowing and lending. Hopefully I explained that a little bit good. But yeah, let's continue listening in. It says, how does the latest rebrand fit into this for Liquidium?
We got actually, as I just mentioned, 2 products. So we rebranded our main brand Liquidium to Liquidium WTF for our P2P product to address the degenerate audience, the degen audience, as those assets are more volatile, as those assets are more niche per se. And then we took the Liquidium Phi brand for the new cross-chain loans product as we address a more mature audience, a bigger audience, and therefore we made space to use Liquidium Phi for the new cross-chain loan product. Just to touch on the community feedback, they gave us great feedback, and I'm pretty sure that we are heading in the right direction in terms of rebranding and marketing, and having those 2 brands really helps us to to divide between those two products, and to differ between those two products.
Now that's very interesting because, we're seeing this kind of across the board, not just in internet computer, but in a lot of different cryptos where they are no longer really focused on you. Okay, like I'm not saying you as a general, but basically like retail, right? Because traditionally retail, they're just here during the degen season, right? When prices are going up, everybody's aping in, aping out, making all this money. That's when most people are coming into the market, so they want access to these products. We've seen it through the course of time. NFTs, coins, the meme coins, Haktua coin, like they want access to these coins. And so them having the ability to utilize Liquidium for this, but also focusing on potentially banks, potentially corporations, companies, businesses, cross-chain collaborations with other businesses and other ecosystems. Obviously, they can't just be focused on degens and people, trading PP coin and ordinals. They need real flow, real money, real actual borrowing and lending to actually have a sustainable business. So they're kind of attacking both fronts. It says, how can capital efficiency be improved?
People always want to use their capital in the most efficient way. So with wrapped assets, you're always having to bridge those assets. You always have to pay extra fees. You always have to wait. So your capital is not used in the most efficient way. That's why most of the people prefer native assets, as they don't have to bridge, as they mostly don't have to wait to bridge, as they don't have to pay extra fees to bridge. So capital efficiency is mainly improved that way. And obviously,
and this is exactly what we were just talking about, guys. Like the fact that sometimes you need the money right now, but you can't get it, right? Like even just people like newbies will be like, if you go on like some of the, if you see on social media complaints and stuff like that, people will say, well, I put my money from Coinbase into a wallet and now I put $50 of Ethereum and now I have $5 of Ethereum. How did that happen? It's a scam. Coinbase took my money. It's like, no, that's the gas fee, right? So just to get into DeFi, you have a barrier to entry, which is money. And sometimes it's a lot of money, depending on what network you're using. And so then being able to borrow on the network that you're on and cross-chain transfer it through another network at a cheaper price. This can take a little bit of time and you may need the liquidity right now. But either way, it's connecting one network to another to make things cheaper, more efficient, and effectively better for everyone, right? Let's continue listening in.
Obviously, if you get your loans faster, if you pay less fees, your capital works more efficient and therefore improves capital efficiency. This approach really mitigates the risk because people don't have to bridge their assets. A lot of funds got lost in bridging. A lot of bridges got hacked because the security wasn't top notch.
Yep.
So people are hesitant to bridge as they have those scenarios which happened in their mind.
Yep.
So bridging
not just in their mind, it actually happened.
Still has some risk attached to it. That's why people stick to native assets. And on the other side, a lot of custodians which bridge those assets obviously have to hold the specific native asset one-to-one in their treasury, for example, to give out those wrapped assets. Some of those companies are not as public, so we don't even know if they have the one-to-one backed asset.
Yep.
So if they don't have the one-to-one backed asset, they can print that wrapped asset out of thin air, which again doesn't make any sense because people will have a wrapped asset which is worth nothing. So that's like a security risk, and we try to definitely reduce that risk in using that native approach.
So you can see that Liquidium seems to be like fairly well versed on all the technicals, all the needs, all the wants of the ecosystem. But they're also looking at some of the risks, and those risks are very, very important to keep in mind, right? I would say like this first stage of Bitcoin DeFi powered by the internet computer, I would imagine this is going to be for very high-level developers and users of both networks. It's probably not going to be something that the average person is going to want to use, because again, there is risk involved, and we still need to get a little bit more information. At least from when I'm recording this video, maybe by the time you're watching it, this info is already updated. Of like what exactly happened, how did this Bitcoin, 55 Bitcoin, get stolen? Because again, 55 Bitcoin at current prices is around $7 to $10 million, which when you're thinking about the grand scheme of crypto, it's not that much. But when you're talking about 450 Bitcoin or just under 500 Bitcoin, and 50 of those, 10% or more, are just gone and missing, and we have to understand why, and we have to create more features and tools to be able to mitigate and prevent those things from occurring. And hopefully it's in the code, and maybe with the utilization of AI, you'll be able to catch that quicker. And so hopefully, people don't lose their money. But we already heard from that team that did have the hack that they don't even have enough in their treasury to cover the losses. And so, yeah, similar to what Liquidium co-founder was saying, these risks that then materialize into actual losses scare people away from actually utilizing these DeFi protocols or cross-chain interoperability ecosystems. And so I'm not saying Liquidium has any issues, because they're not the protocol that had the issue. And I think that they're very different than the protocol that did have the issue. I mean, the protocol that did have the issue is Odin Fund, which is basically an NFT trading ecosystem, aka a shitcoin ecosystem. So some people would say if you're trading shitcoins, they're going to go to zero regardless. So, getting the rug pulled out from under you in a theft, you're going to lose your money anyway, because you're trading coins, right? Or NFTs. But, that's just kind of a joke in the matter. But, this is serious, because, as Bitcoin DeFi grows, as DeFi grows within the internet computer ecosystem, there's going to be more money being locked in, more money being, basically custodied on the internet computer network, and it needs to be secure. Because if there's multiple hacks, people are not going to trust it. And we've seen that occur in Ethereum, and people still trust it, maybe to a much less degree. And that's why you see a lot of chains, in cross-chain platforms are a little bit wider or more extensive, where people would just put it on an exchange and then swap it on an exchange and then transfer it back out. But yeah, I mean, there's definitely risk involved, and it's definitely something on people's minds when they're talking about any type of DeFi, whether it's internet computer, Bitcoin DeFi, or Ethereum DeFi. There are definitely risks involved. And so with that, congratulations to the entire team at Dfinity, everybody who was involved in getting Bitcoin DeFi off the ground, getting some of the marketing out, and hopefully we do see the metrics on the internet computer ecosystem continue to grow and continue to expand, and more usage, more integrations, more partnerships, more collaborations. And soon enough, the banks will be using the internet computer. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up, hit that subscribe button, consider becoming a channel member down below, clicking the join or subscribe plus button. And I'll see you when I see you. Invest responsibly, and as always, crypto on.